setting up the discipline around your finances is the most important thing. Everyone, and this has been a big topic for me. I talk about it a lot with teenage finances and whatnot. But I believe that in schools, teachers and our education system teaches all the kids all about sciences and arts and whatnot. But they don't teach the most important thing, which is finance. Everyone will be out in the real world in some day and they will be earning money. They will have to generate wealth for themselves. But nobody teaches how to manage it, how to grow it, what to do about it. To me, that's so important to have that discipline early on.
I like the word you use, discipline, a lot, because a lot of people say we should start educating about how to invest. But the word discipline is more important because discipline is about really understanding the different things you need to do at different stages. It's being disciplined in savings, for example, at the beginning, budgeting. Today, we have the pleasure to host Ashu Gupta, a seasoned technology leader and entrepreneur. Ashu is the co-founder and CTO of Lean Technologies and also a partner at Back Home Capital, a venture firm dedicated to transforming ideas into impactful ventures by supporting innovators and founders. Ashu brings a wealth of experience in scaling technology and driving innovation, whilst also having great experience in both building wealth and managing it prudently as well. Ashu, welcome to the show.
Thank you so much for inviting me here, Bilal. It's nice to be talking to you. Hopefully some good things about wealth.
Yeah, my pleasure. So I think to start with, walk us through, how's your entrepreneurial journey been in terms of building wealth?
Yeah, I mean, it's quite interesting, at least to me. I started, I think, very young. My first venture was just after I entered engineering. With two of my friends, I started a company which was dealing with hardware. We were building, this was back in India, just to set the right context. We were building computer systems for students and parents who wanted to provide computer systems to their kids. And that was back in 2000. So it's been a long time. We tried to build it. We started making some money out of it. It was good enough for us to pay our bills at the time.
Straight out of university?
It was in the first year of our university.
Oh, wow.
Yeah. It was quite interesting. All of us got interested. At the same time, when we reached our third year, we realized why just hardware, not software? Because there were a lot of people who were also asking about, can you do this a small one? Can you do this small software for our firm? And it was basically more about, can you do this a small part for billing? Can you build an invoicing system? Can you do a smaller messaging system? So like very small things. But we realized we can do it. It was anyways part of our curriculum and we were learning software. So we did that and we eventually created a school management system. And the idea came from my family who was running a school. So we thought like if we build it, we will have our first client immediately, right? So getting the client is the hardest thing after you build it. So we were getting a pilot. So we did that and that's how things started. But unfortunately, we were victim of piracy and our whole software was pirated before we could launch it. And that broke the team quite a bit. We could not raise money and we had to shut it down. So, but that was a good taste, I think, in entrepreneurship. I wanted to build more, but didn't have the team, didn't have the money. So I had to make my money first.
Oh, wow.
So then I had to wait another, I think, 6-7 years before I went into another venture of my own. This time it was with my wife. We started a project called Mojri.com. We built a website which was connecting artisans from India to sell their handicraft products. We invested some money, used our technical expertise to build it. But again, I realized that you cannot do two things together. I was working full time, my wife was working full time, and were trying to do this on the side. Didn't work out. We had to shut it down, but it was again a good experience. We connected with a lot of people, made some money, but not too much money. Third venture I started 2 years after that. This time I had more time at my hands. I had moved into management position, so I thought I will have more time. It was silly of me. Was getting good money from the company. My wife was also in management position, so we thought we will be able to do that. This time we started a food venture. We named it Curry at Home, and we started supplying homemade food to Indian families. This was in Bay Area, by the way.
Okay.
We had relocated to US for quite some time. Were settling there. It worked out pretty well. In 3 months, we had break even. We had good team, 7-8 people working, and it was going pretty well. However, then Department of Health came knocking our door. At that time, California didn't allow homemade food without proper licensing and so many other things. And we realized it requires a lot of money, a lot of investment. It would not work out, and there were a lot of compliance issues. So unfortunately, closed that down again. And then
You persisted.
it is. It's entrepreneurship is, I think, is always like that. You have to try. It may work, it may not work. You have to take the risk. But in order to build wealth, I think that's the only way I know of, which you can use to be in a better place or whatever the mindset is. Finally, landed with Lean, and then now I'm building it, hopefully. Along with Lean, I started Back Home Capital to help Indian co-founders back in India to run companies and start companies. So we do seed investments. So that's how things have been.
Very
Quite
nice.
many movements.
Very nice. And through your journey, we spoke about wealth and building wealth. How has the idea of wealth, what it means to you, changed over time?
Mhm.
And what does wealth mean to you in general?
That's a very good question. And you're absolutely right. The definition of wealth changes over a period of time. And I'll give you a very crude example from my experience. When I went to the college, to me, wealth was that I have enough money where I can afford my bike, can pay my rent, can support all my expenses at that time, and I'm wealthy because then I'm not dependent on my parents or any other means of income and whatnot. When I got family, the definition changed again. But it was still directly coupled with amount of money I had. Because now dependencies are there, a kid is there, and a school and a house and whatnot. More recently, I'd say last 5 to 8 years, the definition has changed completely for me. To me, now wealth means peace of mind. I don't need to worry about anything else. I can do whatever I want. And I have decoupled money from the rest of the things. So to me now, wealth means that it gives me the ability and freedom to do whatever I want to do without worry about this money component. So that is how I would define wealth today.
Do you think that's aspect of age and family circumstance, or do you feel like that is a transition from building wealth to then thinking about how does wealth work for you, and then you work for passion? So do you think it's an age thing, or do you think it's an aspect of after you build it, it just naturally shifts?
Another good question. I think it's a combination of both. Because as people say, with age, you become more wiser. You know whether money is everything or not. But also, I think your life experiences, and while you are making money, your aspirations, ambitions also change for that area, right? It happens. So I think it's a combination of both. Over a period of time, you make money, you save, you build your portfolio, you're getting more comfortable in your life. Hopefully, it happens with most of the people. Um, and then these definitions starts changing. Maybe your dependencies starts going away. So a lot of factors I think play a part. It's not just age.
Yeah.
I've seen a lot of older people who are still not able to maintain what they had.
Yeah. Yeah, I like to think of it as a combo as well.
Yeah,
I think when you have kids, something changes, age, something changes, building wealth, something changes, maturity, and then there's the personal aspect as well.
absolutely.
So you've gone through that journey of and continuously going through the journey of building wealth, but then you have an objective and where you see wealth is, how it works for you. So how do you manage your asset allocation, or how do you manage your wealth for it to work for you? How do you go and take that and put it into practice?
So this is my personal opinion and my personal experience, obviously, right? May apply to others or not, or to your audience or not. I think I was very, I call myself as financially literate at very early age. My grandfather took me to open my first account when I was 10 years old.
Oh wow.
That was my first account. And that was the time where I started getting small pocket money. And the whole intention for my grandfather at that time was that I need to learn about money, how it works. Uh, and the deal was that if I am able to save a certain amount over a month, he will double it. So my account will have more
That's
money.
amazing. That's a good tip for people to follow in general with their own kids. Yeah.
I think so. I followed the same thing with my kid today. He's 16 now, but he has his account since he was 10.
It's like time value of money.
Exactly. And these are the concept, the rule of 72, how compounding works, how the time plays a big role in your savings. All that I learned, I think, early on. I used to make budgets the day I left my house. So I used to have diaries after diaries where every expenditure was recorded and accounted for. My grandfather used to check those things. Um, so over a period of time, I think with these habits, I learned a lot. And when I went into engineering and I got exposed to multiple tools and all, then I started using those tools. For example, I was one of the beta testers for Mint. Mint was one of the PFMs which came about in US by Intuit, and it was like an account aggregator,
PFM being personal financial
management tool.
Yeah.
Yes.
Okay.
So I have to ensure that I say the whole thing. So those kind of tools actually gave me the full picture of my portfolio, and that allows you to make right decisions. So this is just one example. And then very recently, I'd say around 6 years, 8 years back, I got introduced to the financial advisors and fiduciaries. That also helped quite a lot for me to go into different asset management. When I came here, then I got introduced to Sami, World Wealth, and then I was introduced to the alternative financial assets. So all those things have played a part, but it's all management is a combination of a lot of tooling, a lot of good people around you, a lot of reading, and then just building this over a period of time.
Great.
Hope that answered the question.
And how intentional were you about reading? Is that something you would do, every once in a while? Or was there a time of your life where you said, okay, I need to know more about asset allocation, equities, how to manage, and you deep dived? Or is it just something that it was just over time in a more natural state?
I think it came naturally over a period of time. I somehow love talking about these things. So my network, my friends were of similar interests. We used to talk about these things a lot. We used to share, oh, this stock was doing good, or this finance report has come out. What do you think about the predictions? What's going to happen? X, Y, Z. So all those things have helped. I don't intentionally go out and seek information. I do talk to Sami sometimes, like what is the new um, uh, investment opportunity which is coming in. And since now I started investing in startups, it's been some time, but I keep looking for those information. However, over period of time, all the knowledge and information I've gathered, it helps in making the right
Definitely.
decisions. I'm not a financial advisor. I'm not trained to do that. I still rely on my financial advisors to discuss these things. But it is more about you making the right decision when a lot of information is given to you. Then you are in a position to be comfortable that whatever you are doing is the right thing to do.
A lot of times when I ask this question, what I get is an answer of people learning. A lot of people learn from their own mistakes. And you didn't mention mistakes. So I wanted to see, have you done things in the past where you had a lot of mistakes, or has it been more smooth sailing for you?
I think it is my personality that I don't call my decisions as mistakes or regrets. It's just that based on the information available to me at that time, I made a decision. Whether it worked out for me financially or not, it's a different thing. And for me, everything is okay. Because whenever you are making a decision, you're taking some risks. Because no one has seen the future, what can happen. So I'd say there is always some learning from your failed enterprises or decision making, investments, whatever. But that learning comes after, once the course is complete.
Sounds good. And when we talk about, there's always a debate, and especially in the region, in terms of how we think about investing, whether we invest in fixed income bonds and whether we invest in equities. And if we were to invest in equities or bonds, should we diversify? Should we trade? And in this region, you see a lot of risk aversion. You see a lot of people holding cash, and you see a lot of people holding fixed income instruments. So walk me through, which side do you lean towards? Is it the bond side or the equity side, and why?
See, now I think the position I am in, I have a very different understanding. But at some point of time, I'd say I started the same way most of the people in the region are thinking, which is more toward the safe side, not taking too much of risks. And the reason I believe for that was that you have very limited amount of money, right? You have one income probably most of the time, one salary or one income stream, and you're budgeting that income stream to make more money for you. And when that happens, you don't have too much to play with. So you're very careful of what you want to do. So I was like that when I was, again, started saving and after my first job and whatnot. But over a period of time, my philosophy has changed a bit. And that was, I think, after we had our first kid. That is when we started thinking about the college, which was 20 years down the line, but savings, how it can happen. And as I was mentioning earlier, we used to budget all the time. So we decided, me and my partner, my wife, that let's say if we have to save 5% for the college, then we can risk it for some period of time. We can take the highest risk possible to allow the fastest growth possible, right? So that was kind of a segmented decision making, that what was the part of money where we can take more risks. Now then, for a couple of years, once we did that, we realized, yeah, our risk appetite is a little bit different. We should not be like fully saving. And I think at that time we started our mortgage also. So we were like, okay, this is already getting saved. How about that? And that, I think, decision gave us a huge bump. Huge. We were more, we had higher appetite for risk. We went into equity. We went into even crypto at that time. I think I made my first crypto investment in 2013.
Oh, wow.
Yeah.
Did you persist? Did you hold throughout the
Yeah,
time?
yeah. And I lost a lot.
Okay. Yeah.
I lost a lot. I had a miner at my home.
Oh, wow.
Yeah,
Okay. You were an early adopter. Yeah.
It was a different time. In US, everyone has been running some experiments. But over a period of time, the risk appetite changed, and the diversification also happened. Just from being just a bond FD kind of person, or in India, we used to do a lot of life insurances, which is again government backed systems. You definitely get some money. From that, I went into equity. From that, I went into real estate, crypto, uh, and from that, I went into startups. Highest risk, I think, from my point of view. And now it's like the whole thing is diversified quite a lot.
Okay. Yeah, you made me remember my experience in HSBC. I remember in HSBC what we used to do. It's very common in the industry. So you have a risk tolerance questionnaire, and the risk tolerance questionnaire gives you your risk appetite for. But always we don't mention risk, whether risk is risk volatility risk or risk of losing your money. But it's really to capture volatility risk.
Correct.
And I remember what a lot of people used to do is when they're meeting with clients for financial advisory, they would do a risk tolerance questionnaire. So the client would fill it and they would get a risk tolerance score, and then they would talk about investing.
Yeah.
So what I did differently is I tested sometimes doing a risk tolerance questionnaire with a client. I would do it at the beginning of the meeting, and then I would explain what is bonds, what are equities, what are diversification, how it works, why is expected return the way it is, and then I would reintroduce the risk tolerance questionnaire. And then the results are massive because someone adopts much more risk tolerance with knowledge.
Absolutely.
So it's when I reflected upon what you were saying is, yeah, I started, and then, as you adapted, as you built that knowledge base, you had a stronger risk appetite, but it was probably a stronger understanding as well of the markets.
Correct. You're absolutely right. I think it is, a lot of it is due to the fact I was talking to people. Right. So similar to you, which was, I think, a brilliant move, what you were doing. Most of the time when we talk to someone about investments, bankers and life insurance agents or whoever you are in contact with, they don't ask the right question and they don't kind of work with you. This has been my experience. Because once they tell you the way you are explaining, maybe my risk appetite is more. And maybe I'm not looking for things which your questionnaire is asking me.
It's hard to define someone within a questionnaire. Right?
Exactly. So the template doesn't serve to the masses. Everyone, see, finance and wealth is something which is very, very personal.
Agreed.
Everyone has a different opinion, needs, requirements, appetites, whatnot. So I remember one of our fiduciary financial advisor from Smart Assets, his approach was very different. He never came with any template or whatnot. He just started looking in all what we had, and then he started asking questions. What do you want to do when you retire? What do you want to do 5 years? What do you want to do 10 years? What is your next goal? And that helped us, I think, quite extensively, because then we were able to see, we have this much left.
Yeah.
Why we are holding on to it and why it is not invested.
Sure.
Right? Do we really need this much liquid money?
Makes you think about time as well.
Exactly.
And you mentioned that you said when you had a kid, you thought about the college. So you said, okay, this money I'm not going to use for 16 years.
Correct.
So it's, okay, equities are higher risk than bonds, but really over 16 years, the only way equities underperform bonds, the only way bonds make more money than equities, if companies didn't make any money, and then they would find it hard to repay back their debt. So over a 16-year time horizon, the whole idea of a risk questionnaire really gets diminished.
Absolutely. And I think that part also makes you realize, because I had this understanding of how compounding works. Time plays the biggest factor there, right? That's in the formula itself. So once someone explains to you and show you the calculation, you have a very different understanding. Not everyone can do the math in their mind, right? And that is where, you can say, you know what, you invest 100 every month, and in 16 years, this would be the money, right? And that is amazing. And I remember, if I remember correctly, it was, I think, $117 a month for 16 years. My calculation might be wrong, but it was good enough to pay off all the student fees and whatnot at that time for my son. That was nothing. If you think about it, it was, if I do today, it's like the time is gone.
Definitely. And I feel like, you talked about personalization as well, and how you came to terms with it. I feel coming from an engineering background, the way you adapt to things might be much more quantitative, while someone else picks things up on a much more qualitative approach. So it's even depending on which background you come from, there's a personalized aspect of how do you grasp the time value of money as a concept.
Absolutely, absolutely. And I think, again, like, I'm going back to the financial advisor part, why they are so important. Because these people, they understand how you will get this understanding of investment, because they're trying to help you in this way. I might be more qualitative person, another one is quantitative person, or they have some other analogy they can understand with. They really help, really help. But again, it's a matter of personalization, definitely.
Sure. Yeah, I think with that point, it's really about, a lot of people see the value of financial advisors in regards to, oh, what should I invest in? But there's this big value in behavioral coaching and knowledge transfer of how to shift the understanding. You were mentioning that the financial advisor who assisted you in terms of, okay, where do you see yourself 5 years, 10 years, 15 years financially, and how to map your assets towards that. That's a soft skill, and it's not an asset allocation skill. But going towards asset allocation, and if we split it up into, okay, you have the alternative investments, the crypto, the startup investing, venture investing, and we look at the traditional type of investments, FDs, bonds, equities, and specifically about equities. One, how important do you think holding equities is important to reach your objective in terms of how you view wealth? And how important do you think diversification plays a role? Are you someone who scatters your investments in equities in terms of specific sectors, or do you like to diversify globally? So what's your view on diversification and the importance of equity in your portfolio?
I think diversification is quite important, because I have made some decisions in the past where I stayed with one or two companies, and then over a period of time, it did not generate enough of the returns which I was expecting. And not just that, I was only in equities, not doing anything else. So when we saw 2007, then 2011, those were not good periods. A lot of people lost a lot of money. My portfolio also went quite a bit down. And then that, again, it taught me that, you have to diversify. So I believe diversification is really, really important. Again, it depends on your portfolio, your own goals and whatnot. Again, very personal.
Of course.
At the same time, I think equities, I myself have gone from a couple of company person to an ETF person. I don't invest in companies now. When I have to invest in companies, I do the venture funding or the startup investment. Otherwise, I'm on ETFs. And I have reasons for that. It's like I'm not regularly studying the market now. Right, I'm more dependent on my financial advisor, more dependent on people who can get me the right advice. I'm not myself doing that study. So ETF is a good way, which can give you the dividend and for long term. And second, I think important thing is I'm not doing short term investing now. It's all long term, and it's been quite some time, like 6-8 years. It's all long term. Long term is 10 years, 15 years is my timeline. Because again, needs change. You don't need any immediate money. So it goes there. But there was time where I was shorting stocks, where I was in that play.
Yeah.
Done that too. But as we discussed earlier, things change. So diversification to me is very important. Equities, for me, it is more about, again, distributing it across, not staying with one.
And we see something that's very common in our industry or with clients is we see a lot of regional bias and home country bias, whether in the country of residence or the home country.
Yeah.
So do you have a bias when it comes to equity investing? So not the startup investing, because startup investing is very different. But when it comes to equity investing, do you have a home country bias, or do you take a global view, or is it a bit of both?
So for me, it is. So I'm an expat now. right? I have lived in India, then in UK, then in US. All these places I've invested. So for me, it has become more of a distributed investment. And what makes sense to me now personally is where my investment will get me the most returns. I don't have biases. However, I also see that sometimes you have a better return to risk to return ratios, right? So in some cases, I know certain aspects apply to me as a non-resident Indian, so I have better returns for me. It might not apply to anyone else. So then in that case, I would invest in those places. Otherwise, I usually invest globally
Okay.
wherever it works.
And we talked about alternative investments a bit as well when it comes to crypto, venture. Do you see venture and investing in startups something that's more passion driven, or do you think that's more, it's a very good economic strategy? Is it being led from an economics perspective of I can make superior returns in it, or is it more a passion project, or is it both?
I think it is the fourth aspect.
Okay. Okay. So what is that one? Yeah.
So I'll just separate the crypto and
Yeah,
the
of
venture,
course.
right? Crypto was more about riding the wave. I knew being a technologist, I was working on certain things that it's gonna work over a period of time, and it was also learning because everyone was learning about blockchain. It was a very interesting project. So
Do you
it
mind if I
started.
ask you a follow-up question on
Yes,
that?
of course.
We mentioned crypto more broadly. Were you going in various different types of coins, or
Yeah.
was this, early days Bitcoin and going in
Yeah,
Bitcoin?
it was just Bitcoin and Ethereum at that time.
Oh, okay.
Right. And maybe Dodge. I lost a
Okay.
lot of money in Dodge, but
Okay.
it was like meme coins and two most prominent blockchains.
Okay.
Right. So it was there, but eventually just again diversification happened there also, like a lot of these things. However, crypto was just learning, riding the wave, going with where the money is moving, etc., etc. Venture to me is more about giving back. I have gone through a journey where I've tried multiple startups, so seen some failures, and I know how difficult it is to build companies, to raise money, to connect with the right people. So it is my way of like, let me connect with like-minded people and help them as much as possible. And a few times I might get to invest also in good idea. And so I keep like venture as a different category. I may or may not earn money in this. I have over 19 investments, 19, 20 investments. None of them have made money so far. But it's not my idea of building wealth. It may give me something back.
And at the end of the day, you want to support the person with the best idea, right?
Yeah.
That's the person who deserves it the most, you feel like.
Yeah, deserve the most. And some, like I said, that most of the time, brilliant people, they have good ideas, but either they don't have the network or they are not connecting with the right people, which is networking, or they need small amount of money to get started.
Yeah.
And so
Definitely.
you can help a lot.
Definitely. And in the crypto world, what for you is a large allocation towards crypto? And of course, this, we don't endorse any investments on this. This chat is not to endorse any investments. But have you ever exceeded 10, 20% of your net worth ever in crypto? Or is this something that has always been rather smaller that is meaningful if it does do well? Is this something that, has a large portion of your wealth at some point of your time? Or was this always a smaller ticket?
I think it was well balanced to me. Because as I told you, I started very early on. And there was a time where, and it was, I would say again, a decision which I made to sell off everything I had. And that was the time where for multiple years, crypto had not moved. So to me, it was like not generating the kind of returns it should generate. So I kind of lost confidence. And that was the time year after I started running. But it always has been within 10-20% of allocation, which was there. And then I started further reducing it. I went toward more of equities, real estate, venture, alternatives, which were available.
Aligns with your objectives.
Sorry?
The change aligns with your objectives
Correct,
as well.
correct.
Yeah.
Yes. Yeah. So it was more about the change which was happening, but I never took that much of risk where I allocated 50% to crypto.
Yeah. Is that something you regret by any chance?
Again,
Because a lot of people, a lot of people you speak to these days, it's
No,
like,
if you-
I should have put more.
No, if you talk that way, right? I told you I had a minor, right? If I had kept that,
Yeah.
then probably it would be something else.
Yeah, definitely.
Yeah. So, but those are the, like I said, decisions which you took. And there is another thing, right? Whatever is written for you, that's the only thing you're gonna get. Nothing more, nothing less. That's what it is. I
Fantastic.
believe that.
And looking back at your journey and the insights you've shared, what would you say is the most important lesson for our listeners?
I think setting up the discipline around your finances is the most important thing. Everyone, and this has been a big topic for me. I talk about it a lot with teenage finances and whatnot. But I believe that in schools, teachers and our education system teaches all the kids all about sciences and arts and whatnot. But they don't teach the most important thing, which is finance. Everyone will be out in the real world in some day, and they will be earning money. They will have to generate wealth for themselves. But nobody teaches how to manage it, how to grow it, what to do about it. To me, that's so important to have that discipline early on.
I like the word you use, discipline, a lot, because a lot of people say we should start educating about how to invest. But the word discipline is more important, because discipline is about really understanding the different things you need to do at different stages. It's being
Absolutely.
disciplined in savings, for example, at the beginning, budgeting, etc. So that's a great way to end. So thank you, Ashu, for sharing your experience and your thoughts. And yeah, thanks for coming.
Absolutely, my pleasure. Good luck with your next episodes.
Thank you.